Holy flippity flip flop flap and smokes, everyone. I have a quick urgent update for you right now, and I'm actually recording this on my phone because this is so urgent. We got a new Bombshell report that changes absolutely everything in the markets. We're seeing absolute chaos in the markets right now. The stock market's selling off, we're seeing the bond market sell off, yields are skyrocketing on bonds, gold, silver is down, cryptocurrency is down, absolutely everything is down. So you're probably wondering, what is this new report and why is Wall Street so worried? Well, the new report we just got was the ADP jobs report. This is the private payrolls, okay? And the market thought that 220,000 jobs will be added. But guess what? It was actually more than double that. And nobody predicted this, okay? All the banks didn't predict this. The Federal Reserve didn't predict this. Wall Street didn't predict this. This is absolute insanity, everyone. And this is quite worrying because what this means is the Federal Reserve going on their fastest and most aggressive rate hike cycle in history hasn't even put a dent in the jobs market. And so many people are starting to worry, well, if rates have gone up 5% and we got the latest GDP data that was actually up 2%, if we're not in a recession and jobs are growing at record pace, maybe we're actually going to have to go to interest rates much higher than we thought. And quick side note, it's quite funny how our economy works and how the markets work. You know, when people get jobs and get big pay rises, Wall Street like, what's going on? Why are the peasants getting jobs and pay rises? We must slam the markets down now. And also what we got in this jobs report is wages are going up very quick as well. Wages increased 6.4%. So this is more than triple the Federal Reserve's mandate. That's what's got the markets very, very worried as well. Okay, now what we have to talk about is what caused the banking crisis in March. Well, it was bonds falling in price and yields surging. Okay, now what we're witnessing right now is the 10-year has spiked. It hit a high, as I'm recording this, of about 4.07%. The 6 month right now, you can get a yield of 5.5%. So why would you even bother investing in dividend stocks when you can get a pretty much risk-free return unless the US government defaults of 5.5%. So this is really spooking the markets right now. I'll just try to get some updates here because as I'm talking about this, things are getting absolutely crazy. Now, also something else that happened is the 2-year Treasury yield has now done something it hasn't done since 2007, right before the 2008 subprime mortgage crisis, the Great Recession, the greatest financial crisis of our lifetime. The 2-year Treasury has also gone over 5.7%. So that's what's got the markets very, very worried as well. This is a 16-year high. And again, what's got the market so worried is the Federal Reserve has taken shot after shot. They've tried everything they can to bring inflation down, but they made a very, very big mistake by pausing in June. And this is what I tried to warn people about. There's like, oh, you're just being a fearmonger. You'll say things are bad no matter what. But no, people, I tried to warn, if they did start slowing the interest rate hikes and if they did pause, we're going to see inflation surge again, and this could cause a market melt-up. Okay, now this is what the market is finally waking up to reality of what could be a possibility. So what we could see is maybe the Federal Reserve, like I've been trying to warn about, may have to go to 6-7%. Also, what we've been seeing, because you know most people's mortgages are fixed for 30 years in the housing market, nobody wants to sell their house anymore because they've got a mortgage with a 2 in front of it, or a 3, or even a 4. So nobody wants to sell their home. So the housing market isn't crashing as fast as a lot of people thought, even myself included as well. And we're seeing this around the world, even though in Australia, UK, Europe, etc., Canada, people still have their mortgages fixed, in some cases 5 years. So we're not seeing the market crash happen as soon as we thought. But unfortunately, what this means, it means there's going to be more pain coming. There's going to be more rate hikes coming. And this is why the markets are in chaos today. All right, so what we could see is this market rally we've been watching. I've been trying to warn about that, hey, things are getting absolutely crazy. The markets are being overbought. Valuations are becoming overvalued again. It's all because of this AI hype. And again, I have said that AI will change the world, but it doesn't mean you pay whatever price for it. Just like what happened with the internet in the dot-com bubble. So everyone, that's exactly why the markets are selling off today, because of this jobs report. It means the Federal Reserve is going to have to lift interest rates even higher, and it means the lag effect, what we've all been waiting to happen, hasn't happened yet, and we may still, not see real pain for another 6 to 12 months. But what do you guys think? Let me know down below. Thanks for watching. You're awesome. I'll see you all in the next video.